of 2025, which were published yesterday and are available in the investor relations section of our website, and then take any questions that you might have. Please note that this webinar is being recorded. I will now give the floor to our CEO for some comments before we present the actual financial performance in more detail.
Thank you very much for the introduction, Stelios. Ladies and gentlemen, good afternoon. I'd like to welcome you all to the H1 2025 financial results conference call of the Athens Exchange Group. It's a pleasure to share with you today an overview of our strong performance during the past 6 months. First half of 2025 was truly a period of robust financial results and significant progress for our group. We maintained strong momentum across our core business areas, achieved compelling growth in both turnover and profitability, and continue to support the development of a dynamic and resilient capital market in Greece. In terms of market performance, the first half of 2025 showed remarkable progress across all key metrics. The general index of the main market closed up 33%, reflecting the strong investor sentiment. The alternative market index also recorded a significant increase of 24.8%. Total capital raised reached 592 million euros, signaling continued strong appetite for new listings and capitalizations. The average daily trading volume surged by 37.5% to 197.7 million euros, reaching its highest level since 2009. Average market capitalization also increased significantly by 19.2%, reaching 116.3 billion, the highest valuation since 2007. Foreign investor participation remained exceptionally high, reaching a historical level of 68.8%, underlying sustained international interest and confidence in the Greek market. Finally, the volume in the derivatives market saw a solid increase of 22.6% to 51.6 thousand contracts daily, showcasing healthy activity in this segment. Allow me now to briefly highlight some of the key financial figures of the group. Turnover for the first half of 2025 increased by 26.9%, reaching 34 million euros, compared to 26.8 million in H1 2024. EBITDA recorded a substantial rise of 41.4%, reaching 18.1 million, up from 12.8 million in the previous year's first half. Consolidated earnings after tax reached 13.5 million, marking a significant increase of 43.6% compared to H1 2024, and operating expenses were effectively managed with an increase of 12.5% to 14.4 million, reflecting strategic investments in our operations. These results reflect not only strong market performance, but also the successful execution of our long-term strategy. In 2025, we continue to invest heavily in technology and infrastructure. We unveiled our new corporate website, a modern, intuitive platform featuring a fresh design, an AI-powered chatbot for instant support, and critically, full compliance with all accessibility standards. This ensures everyone can access the rich new information and insights it provides. In addition, we upgraded Hermes, the Hellenic Exchange's remote messaging service, to a modern and effective environment for the submission and publication of information from Athens-listed companies. We also continued our extroversion efforts. Through targeted events, we promoted our market along with prominent large and mid-cap listed companies during selected presentations and roadshows that took place in Athens, Larissa, Geneva, Warsaw, and New York, helping companies in accessing new pools of capital and investors. A significant milestone for us in the first half of 2025 was the inclusion of the Athens Stock Exchange on the watch list of a third global index provider, STOXX, in April, following two major global index providers, FTSE Russell and S&P Dow Jones in 2024, for potential upgrade to developed market status. Very recently, just last week, S&P announced its proposal to reclassify the Greek capital market to developed market status from its current emerging markets category. This decision, expected to take effect during the September 2026 index rebalancing, marks a profound recognition of the progress made in recent years and further strengthens our position on the international stage. In line with our strategic priorities, our steadfast focus remains on supporting the long-term growth and competitiveness of the Greek capital market. Our priority is the completion of Athens' transition to developed market status, a move that will further strengthen our position in the global investment landscape and contribute to the sustainable development of the Greek economy. I would like to thank you all of you, our shareholders, partners, and market participants, for your continued trust and support. I would also like to express my gratitude to the entire team of ATHEX for their hard work and unwavering commitment to delivering on our goals. With that, I will now hand it over to our CFO, Nikos Koskoletos, who will take you through the detailed financial results for the period. But before I do that, I'd like to acknowledge that many of you may have questions regarding the status of our discussions with Euronext. On this matter, the only thing we can say at this time, as publicly announced last week, is that discussions with the board of directors are ongoing. Should there be any material developments, we will inform the market accordingly and in a timely manner. Therefore, we kindly ask you for your understanding, as we will not be taking any questions on this topic during today's call. Nikos, over to you. Thank you.
Thank you, Gianno. So let me thank you all for participating from my side as well. In terms of our turnover breakdown, we like to kind of slice the information accordingly. You'll see that most of our revenue is from what we call activity-based revenue. These are the revenue generation that stems from the market activity in terms of the actual transactional value, and these are basis points on that traded value. It went from 61% in the first half of last year to 68% this year, as one can imagine, because of the strong increase in the average daily traded value. The listing component, which we call the market-based revenue, and these are basis points on the actual capitalization, whether it be new listings or the subscriptions of the listed entities, that stands at 10% from 12% last year, and then 22% that makes up the remaining mix of our revenue in 2025 is from our services portfolio, and that is down from 27%, again crowded out by the significant increase of the activity-based revenue. Looking now in more detail in the revenue from activity-based the activity-based revenue mix, you'll see that, as mentioned, 37.5% increase in the average daily traded value, close to 200 million euros in the first half of the year, at 197.7 from 144 last year. Derivatives also showing some nice increase at 51.6 thousand contracts compared to 42. And effectively, that has brought our revenue from trading at 37, showing a 37% increase at 6.5 million euros from 4.7. And this is a like-for-like comparison, given that, as we had mentioned last year, was the first time we had introduced bundles for the actual pricing. Effectively, members pre-purchase each month the actual band that they want to be set in. So it's differentiated as well with regards to where each member participates in the market. Our effective fee for the first half of the year is 1.06 basis points compared to 1.1 in the first half of the year, and that is lower compared to the 1.25 flat structure that used to be the case up until the end of 2023. Nevertheless, we believe that has brought additional mobility to the market, so we're quite happy with the outcome there. Revenue from the post-trading side, 42% increase there at 16.5 million euros for the first half of 2025 compared to 11.6. And obviously that goes hand in hand with what's happening in the trading component as well, and some additional OTC activity that we saw in the first half of the year. On the other revenue components, if we would go to listing, as mentioned, this is a revenue line that derives its activity from the actual size of the market. So in the first half of the year, The average market cap was 116 billion euros. That was close to 20% higher compared to 2024. The current market cap is closer to 130 billion. We introduced an increase in our fees with regards to subscription as well. So overall, we're able to offset the runoff from a very strong 2021 year with the capital market activity there. And as you know, IPOs and secondary offerings, those run off after a 3 or 5 year period. And given the 2021 strong performance, 2024 was the last year that we had some significant numbers there. And despite that runoff, we're close to 6.8% higher in the particular line in listing. And given the activity that we've had so far this year with 3 additional listings of Alter Ego, Vice Holding, Qualco, at the end of June, we also had the re-IPO of Alpha Bank, and more is expected toward the end of the year. But again, these are revenues that will be reflected over the period of time according to the IFRS 15 accounting standard. On data, which is the next slide, we have that nice 5.5% mid-single digit growth that we've exhibited over the past a number of quarters now. That's fairly consistent with what we've been doing there with adjusting our pricing policy and the fact that we do not have any slippage despite the price increase. These are moderate price increases that we think that the market is mature enough to be able to be absorbed. So nice 5.5% increase there. IT digital services, 3.5% almost increase at 4.3 million compared to 4.2. And we were working off a rather elevated base effect in the 2024 year because of the increased revenue from electronic book building that we had in the first half of 2024. And we note that our Bursa Kuwait contract has also run off its course. It ended in 2024. On the OPEX side, our headcount is broadly stable, just 2% lower compared to last year. Overall growth there is at 12.5% on the OPEX line at 14.4 million euros. Personnel remuneration account for 61% of total operating expenses compared to 58% in the first half of 2024. Personnel costs are up 18.2% in the first half of 2025 at 8.8 million euros compared to 7.5. The increase there is actually twofold, predominantly due to the link of the variable compensation that is tied to our operating profitability and the growth thereof. And there's some moderate wage inflation. Other expenses, more moderate at 4.7% with regards to other expenses. On our financial income and the profitability, so given the differentiating growth rates of both our revenue and on the OPEX side, EBITDA grew by almost 41% at 18.1 million euros. That was significant operating leverage working in our favor there. Some financial income increased by 21.4%. That is mainly tied to the fact that since the second year of last year, we've been accruing income in the cash deposited at the Central Bank of Greece at the CCP level, which was not the case up until the end of last quarter. So despite interest rates being on the declining side, there was a positive base effect there for us, that hence the increase in the financial income line. All that led to a 44% increase in our earnings after tax at 13.5 million euros. And One thing that also should be noted is the expansion of our EBITDA margins and the net profit margin widening on both occasions, given the operating leverage. 55.6% EBITDA margin in the first half of the year, 48.7% at the EBIT, and 41.5% net profit margin, showing an expansion of almost 5 percentage points. Finally, I just want to make a point on our cash balance, which at the end of June was at 75.1 million euros. That was compared to 68.6 million at the end of 2024, and that's also accounting for the fact that we also paid out the dividend for the year. So that's another testimony to our increased cash conversion that we've been exhibiting. So with that, concludes the presentation of the results, and we'll be happy to take any questions you may have on our performance. Thank you.
If you want to ask a question, as you all know by now, you have to raise your hand and you will be given the opportunity to do so in turn. So we currently have 4 questions. I'll take them in the order that I see them. First question comes from Mr. Miguel Diaz. Miguel, you have the floor.
Hello, can you hear me? Hello?
Yes, Miguel. Yes.
Oh, yeah. Okay. Cool. Yeah. Thanks a lot for taking my question. And congrats on the strong results. So since I cannot ask anything about Euronext bit, I'll just ask something about the operations. So in terms of cost dynamics, what can we expect in the second half of the year? I know that usually the second half is heavier than the first half, but on a year-on-year comparison basis, will the second half costs increase around the same level as the first half, so around 12.5% year-on-year, or the increase will it be a bit more contained?
Okay, so thank you, Miguel, on that. Yes, our expenses are on operating basis, and assuming that market conditions remain with the dynamics that we've seen, it's a fair assumption that we will be probably ending up the year with a slightly higher percentage in terms of our growth rate compared to the high single-digit number that we had talked about, potentially double-digit. It seems that it's in that area of of what has been exhibited in the first half of this year.
Okay. So fair assumption that full year 2025 we end up with low double digits. Yeah.
That's a fair assessment on an operating basis, yes.
Okay. Thank you so much.
The next question comes from Mr. Andreas Mavridis. Andreas, you have the floor.
Hi from my end. Hopefully, you can hear me. I think we should be good.
Yes, we can hear you, Andreas.
Thank you. My question is that regarding the fee at 1.06 bips versus the 1.01 bips regarding the new bundle structure. Do we see that changing going forward? Maybe increasing into next year? Is that something in the plans, or is that something that we're going to remain constant? And my second question, in terms of the increase in growth of the IT digital and the other revs and the data services, you noted that we had lower revs from EBB, but it was offset by other services. Can you touch a little bit on to what other services that helped offset that? And then my last question is regarding the market classification. Regarding MSCI's decision, is there any color you guys could give us with what the process is that as they consult market participants? Is there any light as to what the process are going forward timeline, or is that something that we have to wait till next June to find out? Thanks.
All right, Andreas, let me first take your last question. They, as you probably saw from their announcements, that they opened a window to actually go beyond the strict confines of their process. In our interpretation so far is that this actually leaves the timing open, not necessarily up until the end of the year, but actually earlier. So, as you know, the other important component here is that they're not fully clear in terms of the details of the protocols that they follow. We know whatever 80% of them, but the other 20% is in the background. But I think to answer your question, the clock is ticking already. If they desire to actually move along those lines, it will take a few months, obviously, because if you're going to have a deliberation with the market, it's not going to happen overnight. But it doesn't necessarily mean that they need to wait actually a full year. That's at least our interpretation in terms of what we've discovered in terms of color here. Nico, do you want to take the other two answers?
Yes. So Adrian, the other two questions you have, one on the basis points with regard to the trading revenue, we do not foresee, we do not have any plans of increasing that fee. If that was your question, in terms of what we see going forward, we see it stabilizing around these levels with some marginal moves, given that all our members have already positioned themselves and placed themselves according to what they experience and given market dynamics. So our assumption is that we are fairly stable around these levels. On the IT digital services portfolio and the revenue mix there, yes, there was a EBB that was lower. That was close to 400,000 euros that we had last year that we didn't have this year. And last year, remember, we had the placement of the PDO shares that the EBB was used, and that was a huge, significant transaction, hence the base effect there. But on the other hand, our team constantly works on additional developments and deployments. We had some additional contracts that came in with regards to our cooperations with external parties that we have that started generating some income. There's a service as well that we are offering to the PDMA with regards to the actual processing of the retail participation in T-bills. That's also generating some nice revenue for us. So it's a mix of additional services that came and offset that particular number and was able to generate that 4%.
Great. I appreciate the answers. Thanks so much.
So the next question comes from Eleni Ismailou. Eleni, you have the floor.
Hello, congratulations for this set of results, and thank you for taking my questions. Could you give us a breakdown of how much of the increase in ADV was driven by structural changes versus cyclical factors for the quarter? And my second question is more of a follow-up to Miguel's question. So what are your turnover and market cap assumptions for the second half embedded in your internal planning, if you could comment on that? And I have a third question, if I may. I understand that you said you will take no questions on your discussions with Euronext, but I was wondering if you could give us, by any chance, an update around the status and potentially any sort of timeline of your discussions with the group. Thank you.
So let me go with the first 2 points. Can you repeat, Eleni, the first question? I'm not too sure I understood it.
Sure. If you could give us a breakdown of the ADV for the quarter, how much was driven by the structural changes, or, versus the cyclical factors of the economy?
And by structural, what exactly do you mean?
The IPOs and anything that came also via your changes that you have made in your digital infrastructure systems.
Okay. We believe that it's a combination of one, the fact that we are operating on a trading platform that offers lower latency. That is something that I forgot to mention with Andrea's questions, that we had some pickup in co-location revenues as well. So we had some additional people wanting to set up infrastructure close to the matching engine. That also helped in additional revenue in that. But in terms of actually breaking down and making that attribution as to what is attributed to the upgrade of the infrastructure, what is the pricing policy, etc., I think it's a little bit too assumptuous with regards to actually getting to that. We definitely know that it's helped because we've been discussing that with clients, and that is these changes have been welcomed. With regards to the IPOs that came in, yes, they have been, they've added to the additional trading value, but given the fact that there are the names and the actual attribution of our average daily traded value, I think, is very well known in the market, where the concentration is and how it's spread out, and which names are the higher producing names that have delivered these results. So everything has helped, but we do not have a specific quantitatively driven model of attributing. But we definitely know that, and this is from anecdotal evidence, given our discussions with clients, that the changes that we've made to the infrastructure have facilitated participation and has encouraged participation further. Now, I think you can understand and respect that we cannot, as much as we are going off what current market dynamics are with regards to how we foresee the future, at least for the second half of the year. On the OPEX side, again, it's the discussion about a low single-digit number is just working off what the experience has been so far this year.
Nico, you want to take the last question from?
Yeah, sure.
Well, regarding the Euronext matter, discussions are ongoing. As publicly announced last week, the conditional takeover proposal received on July 1st is currently under evaluation by our board of directors in collaboration with our advisors. The board's pursuit in this discussion is guided by the best interests of our shareholders and all market participants. You've seen the official announcement. If there's anything new and material, we'll promptly inform the public. But in terms of the timeline, I'm going to have to rely on whatever, either Yogi Berra or Niels Bohr, which is to say that it's difficult to make predictions, especially about the future. So I'll leave it at that.
Thank you both. And again, congratulations for the set of results.
Thank you.
Thank you, Vinny.
We do not have any other questions at this time.
Okay, so on that note, thank you all for participating, and we'll make sure to see you at our next earnings conference call.
Thank you.